Hi there, Carlos Martins here. Today I want to talk about convex trading. The trade that you have like a minimum stop loss and a maximum take profit. Like it's an asymmetrical trade where you have like a big win in detriment of the loss, the risk that you are taking. Here we have on our platform 10 agents running, 10 different intelligence running inside the same platform. And what you are seeing in agents number 8 and number 9 is the convex trading running. We have the sum of all agents, 24-hour break, like from midnight to midnight. We have in total PNL here, 1,000 right now. We are like at noon today, and almost 2,000 the global PNL. The global PNL is the PNL from the broker, and because we use futures, and I always explain this reason how it works. It starts 6 p.m. from the previous day. So what happened yesterday night is here inside this global PNL, and the price on rails PNL, the PR PNL, it's 24 hours from midnight to midnight. So it's different from the global PNL. That's the reason that we have both. Of course, what's happening inside the broker, we have in the global PNL, that's the official number, okay? We have here what's going on, your position, open positions, your realized and realized commissions that you have paid, everything from the broker, that's the official number. The total PNL is the 24-hour counter for the dollar amounts that we have from midnight to midnight. So you can trade stocks, futures, anything. That said, let's talk about the convex trading. How does that work? We have an open trade right now, so it's easy to explain. This is the P&L screen for the agent number 8. I have number 8 here in the title, and this is the order ticket for if I want to trade manually. What I am not doing this, I'm not trading manually. I'm just letting the agents trade by itself. So we have some configs that it's using to trade, and we have this real-time view where we can see what it's doing. So we have a long and a short position. The convex trade, it uses the short position, that's theoretical position. The F here is because it's a fake trade, okay, like F is for fake. The blue is for fake. So everything that's paper trading, not with the broker, but with the platform itself. The platform has an abstraction layer of a paper trading broker inside, built in inside the software using market data to control the orders. We have this in the color blue. So you have like any position that you have with F, and the color blue is a fake position that the platform is paper trading inside itself, just to control the statistics, to control the sequence of what's happening, because the sequence is important in the agent, the AI agent. It's using the sequence of happenings to control everything. So one thing that we have, the agent controlling, is the prognostic, the projection, the next 5 bars, the price on rail, next 5 bars. That's one thing. The other thing is what happened in the past, in this case controlled by the standard deviation and the SMA, the SMA 20 for the Bollinger Bands. And another thing is, based on the past also, is what was traded today, what was already traded today, the sequence of what we have done today for that specific agent. So this blue-orange coloring is dedicated for a fake trade, and the green-red when it's a loss, it's red when it's a profit, it's green is dedicated for real trading. In this case, we have both trades, the convex trades, it uses both trades at the same time. It starts with trying order for the market. If this order is a profitable order, then it exits, and that's it in the fake trade. If it's not a profitable order, if you have like an averaging down entry, a second entry, the second entry triggers a reversed signal to the real account. So it like identifies that probably what's going on in the market, it's different kind of volatility that needed you to start an averaging down trading. That is what I call the brute force traders. The agents number 1 to 3, they work with the brute force attack. Agents number 5 to 10, they use it with the reverse, the brute force attack, when you start with the maximum position then reduce, and agents 1 to 3 start with the minimum position then increase. And what we have in agents number 8 and 9 is the reversed brute force attack. It's not the reversed logic only, but the reverse brute force attack. It's very similar to the options trading. Oh, this is agent number 9. Let me open the configurations of agent number 8 here. What we have here, it's a paper trading for the first entry, and then the convex trade is white because it's not paper trading. It's a real trading for the convex trading. We have 5 averaging downs for the paper trading, and of course, because the second entry will trigger a first entry to the real account for the convex trade, we will use the 4 entries for this convex trading to occur. And what happened here is the stop loss that you have will be the exit. Let me show what's happening. The stop loss that you have will be the exit for the short trade. Okay, so this is the short trade. We have like $1.25, and it like makes it straight when you are positioning. Like it's now $41 negative in theory with the fake trade, with the take profit with only $1. So here the theoretical part is the part that's opening a very big dollar amount to one side with a very short dollar amount to the other side. And we reverse that, the convexity trade is reversing that. So what we have here in the long position is that if the position comes down, okay, if it goes south, the stop loss will be the take profit of the theoretical. So the stop loss will be $1 now. And we are in an open position with $71. The take profit, it's a fixed take profit of $125 per each micro, 25 points with a $1 stop loss. Of course, we have slipped when we achieve that $1. So we have sometimes very large amount of small losses going on this strategy, but a few huge profits. So this convex trading is working with a huge potential, a huge profit potential with a minimum stop loss, So you are not incurring in a big risk. That's the thing about this configuration. You are not incurring in a big risk. You have less risk here that you have with the reverse martingale, less risk here, way less risk here that we have with the brute force attack, and less risk even that we have from the regular trading without averaging down, without anything, just trading with the signals of the 5 bars. That gives us something between 75 and 80% winning rate. And we can use that also. And we also have like a downside that's symmetrical with the upper side of the strategies. And these symmetrical and asymmetrical for the loss things we don't have with the convex trade. So the asymmetrical is completely biased for the profit part, and the stop loss is minimal. And as you can see, trading 2 or 3 contracts here. But let's see the report. This is by the way, the P&L. This is the chart of the P&L for today. It's really beautiful. And what we have here in the agent number 8 is that we have 2 entries right now, and it's putting all together the theoretical and the real trades. If you go to the P&L evolution, we will see only the real trades. We have one open order. So what we are seeing here is what's inside the manager, the personal rails manager, $70 with these trades that we have, like the total, the number of contracts traded right now, 11, but we have only 1 in a real account. 10 contracts were sent to the fake account. And we have the same thing, the agent number 9. So with 1 contract, we have $72. And here we have, this is good because we have only 2 contracts, both sides. And this is 125. This is actually what happens with this agent. Was very, very, very smooth. So 2 contracts, $200. 2 micro contracts, $200. The same thing that we have here. If we go to the agent number 2, probably is the agent that zeroed now. Let me see. We have 90 contracts for the same 200. Okay, so 2 contracts, the convex trade for $200, 90 contracts for the same $200 on the agent number 2. So the brute force attack. So that's the difference among all those agents and basically between the convex trade and the regular trade. So the convex trade is the most promising configuration that we have right now for the agents. This is a new configuration. We started with this 15 days ago, but the upside is huge and it works beautifully for options for several, not years, but decades. People use this kind of trading since ever because it pays off, and we can use that inside price on rails agents. And stay tuned for the next chapters of this, that you are going to see real results with this. And if you want to check out the results, the daily blog of this account that I have here, the results that we have on accumulated, you can go to translatestocks.com/trading, and then you have our trading blog with the explanation of every day. Some days we have videos where we explain why we are doing some configurations, and you can see, of course, the results that we have with this account and with all those configurations. Okay, thank you for watching this, and see you on the next video.